Good morning, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is April 21st, 2013. Lots to talk about, so let's get started. First of all, thank you very much for hitting those like buttons and taking the time out of your day to watch these videos. I do appreciate it, and it does help me in continuing on making these videos. Alright, so as I discussed in a few videos before, if you're new to watching these videos, the way these videos work is the reason why they're so long is because sometimes I get into some kind of rant, or I actually talk about individual stocks. Today it wouldn't be so much individual stocks as I did last week, simply because most of what I talked about last week still applies for today, except for some anomalies out there. So I want to just make those clear first. But what I'm going to do is talk about the SPY first. The SPY being the ETF that tracks the S&P 500. And then after that, I'll go into more detail. That way you can turn off the video after the first few minutes of watching it, just to get an idea of what I expect to happen in the following days. Alright, so this is the chart of the SPY, which is the ETF that tracks the S&P 500. And just as a reminder, 7-minute market update has a Facebook page that I'll put a link on the bottom of this video in the description area. And if you like the Facebook page and you have a Facebook account, anytime I update people during the week, they get the update immediately, versus having you having to wait for me to make a video. Okay, so just want to put that out there. Alright, so let's zoom in here and let's see what happened. So in the in last week's video, I said, okay, watch this bottom trend. I said a few things in last week's videos. First thing is, last week was the week that options expired. In fact, yesterday the options contracts actually did expire, and the Friday before that is the last day you could trade options. And a lot of times institutions get a little bit greedy. Well, not greedy, but they manipulate the market, and they call this price pinning. And what they do is they try to get people to dump their contracts, or lose money on their contracts, or better yet, just have their contracts expire worthless. And that's why there's a lot of manipulation in the market. There's a lot of false rumors that get released with CNBC, and it gets people scared and stuff like that. And that's why we look at technical analysis and not the news. If you watch the news, you just got it too late already. Institutions or hedge funds and people like that, they spend a lot of money to get the news 10 seconds before you do, and that's enough for them to know what your reaction is going to be, and that's why they make the money and not you. Us retail traders, we don't have that kind of money. We don't have money to move the markets. We don't have the kind of money to pay for services like that. But what we do have are charts, and charts will give us the emotional part of how people trade, right? You have fear, you have hope, and you have greed. Okay, and those are the three main emotional reactions. And if you put fear in the market, the VIX goes up, the market goes down, and you get greed. I mean, it's just so many psychological things behind actual charting that you really don't need to understand per se, but it does help to understand. And that's why patterns will always work, and has been working since, years ago. I mean, like centuries ago. I don't even know if it's that long, but in any case, to make a long story short, that's what they did last week, and that's why we had so much volatility. The week before that, I said we were gonna have volatility, and we got that. Last week I said we were gonna get volatility, and we got volatility last week. So I also said to watch this bottom trend line over here. If the bottom trend line breaks and we close below that break, which we did on this day here, so we broke through this trend line and we closed here, but we needed to close below the low of the day before, which is, this was, if you look up here, you'll see the high, the low, and the close. Alright, so the low of this candle here was 154.28. The close of this candle was 154.14. So on a technical level, this is how should I say, this breakdown here is validated. It also happened on higher volume. The volume wasn't much higher from this one here, if it was even that. This was a 226 million, and this one here was 217 million. So yes, it was higher, but it wasn't that much higher. But nonetheless, it is a technical breakdown. All right. So on a technical level, on this day, this is a technical breakdown from this bottom trend line here. Okay, so what does that mean? Well, what I was hoping for was another down day. Okay, one more down day, one more red candle, would have convinced me that this here would continue down, not straight down. Obviously you're gonna get bounces in between, just like I talked about in my previous videos. Okay, just keep that in mind. You can always look at the previous videos. I don't take it off the YouTube channel, so that way you can always validate and verify what I'm saying today is true versus, you know, those other paid places out there that say I told you this, I told you this, I told you this, and really they kind of didn't, right? I mean, okay, I don't want to get into that rant. I made that agreement. I'm going to talk about the SPY first. All right, so you come down, and the reason why we didn't get another down day, which was what I was hoping for. Um, okay, let me take a step back before I get confused. Get you confused. All right, the reason why I was looking for one more down day is what? Because I wanted at least 3 down days, 1, 2, 3, in order to make this a full, how should you say, validation or confirmation, whichever way you want to call it, that this could potentially reverse. And if it did reverse back into this bottom trend line over here, that would be a retest. And in which case, I would actually initiate even more shorts. I'm already short the market, okay, 2 times. And this would validate, not validate, but this would initiate or cause me to initiate another short. My short is around this area here, okay? If it retests this bottom trend line over here, I would initiate another short, and my stop of that, this initiation here, would be at anything above the 157 level, which could actually happen. So keep that in mind. And that's why I wanted to talk to you about this this move here. This 1, 2, 3, you know how I am with the 3 candles, at least with a breakout, breakdown, or any kind of pivot point. I mean, this is a very nice pivot point over here. This was almost an not really an obvious if the tail was a little bit longer, it would have been, and the volume was a little bit higher, then that would have been more of an obvious move, but it wasn't like that. So it was kind of a half in kind of move there. But in any case, we come down, we break down from this bottom trend line. I was hoping for one more candle down that would have validated this for being another short trade. But because it didn't do that, because we already got a bounce, and the reason why we got a bounce was because the down day was so big. Let me just get rid of these here. You know what, better yet, I just restart it there. Okay, the reason why we had a bounce was because the day before, which was Thursday, went down so much, okay, that it went right into this mathematical 154.10 level. Okay, this is again for you people who are just watching these videos. This is a mathematical calculation that was born a little over a year ago that nobody else has in the world, because I would never sell this calculation. I mean, you can see the 157 level, how accurate that was. I mean, it's not 100% perfect. Sometimes it is. Sometimes it is, but more than not, it's not going to be perfect. It's going to have, you know, it's going to be a few cents off depending on the price of the stock. For example, I caught a short on Apple at about 680, and it turned over at 700, which is not bad. Okay, so but that's a huge stock, and then the SPY you're looking at a few cents. Okay, in this case, we closed right on the 154.10 level, which was actually 154.14 was the close. Okay, this candle actually bounced right off of the 50 moving average. You can see that it kind of cut through the 50 moving average just a little bit. The low of this candle was 154.28. But when you look at the chart here, you can see that the 154.10 level is holding. And I mentioned to you on Facebook as well as the previous video, we need to see a close below this 154.10 level. That is what we need to see in order for this to for me to feel comfortable that this will be the time that we actually start correcting. And corrections, everybody thinks corrections is a bad thing. It's actually a good thing. A correction doesn't mean the market's going to crash. A correction just means that price is going to validate itself. You know what I'm saying? Meaning right now everything's so overinflated. We need a correction so everything can come into you know, realization, or the practical prices, or whatever you want to call it. You know, so corrections are healthy for the market. You can't just keep going straight up. It's just it wouldn't be healthy, because the higher we go, the the farther we will fall. Now, if you remember, I had a line right here in the previous video, and this line lined up right where this tail ended up. If you go to the high of this candle here, let me just Let me just delete this. The high of this candle here was 153.28. Okay. All right. So you can see the candle almost came down to the 153.28. The low of this candle was 153.55, and then we had that intraday bounce. Okay. So what that means is this is already used up. The next stop would be that gap fill over there if we can get down here. Okay. We got that bounce because we hit this mathematical calculation, which is 154.10, and I said, well, you know, we need to see a breakdown of the 154.10, right? We didn't get that. We actually bounced and we didn't get a third candle. So that tells me that this is going to be bullish. Okay, whether or not we do go up next week, and next week we don't have any types of options expiring or anything, but we do have earnings still, so we just have to keep our eye on earnings. And when you have big time players for earnings, and I'll talk about that later in this video, I just don't want this thing to get too long. We're gonna have volatility depending on the players and earnings. So if you're talking about Google, Apple, those kind of big players, JP Morgan, those kind of people, then you're gonna have a lot more movement in the market. Okay, so what do I think? I think that if we do go up, now this is the upside scenario, because you already got this bullish move. In fact, the low of this candle was 154.12, which is 2 cents off the 154.10. It's these calculations are just amazing. I mean, if you look at this candle here, the low was 154.20. The low of this candle here was actually 154.10. Okay. Anyways, um, there is a possibility that depending on how far or how long it takes us, sometimes I've seen candles green. There's more green candles than red candles, but we could actually see, because the close was around here, a candle immediately just on Monday, because Monday is normally a low volume day, um, hit the 157 level just like that. Okay, and if it does, and again, because we didn't get 3 candles down, this could potentially mean that this bottom trend line is not going to be a retest, and it could potentially mean that this is another trend line or part of the trend. If I move the trend line this way, okay, keep in mind that this could also be the bottom of this trend line, bigger trend line here. This just simply means that we could pop even higher to make a new high. Okay, so just keep that in mind. I am not bearish yet, because I did not get validation, meaning I did not get that third candle coming down here, which means that there is still a possibility that we could go higher. Okay, so just keep that in mind. And I will not be shorting at the 157 level, simply because I am already short in the market and we didn't get that third candle down. So there is a potential that we might break out of this 157 to go even higher. And that's my bullish sentiment, but I'm not bullish either. Okay, I'm not bullish either, because like I said before, I am expecting a correction very shortly very shortly to happen, and it's just a manipulation in the market right now that's keeping it up. Okay. Excuse me, that's just my opinion. In another scenario, for the bears out there, however, you notice this here is a lower low. Okay, if I draw the line here, that is a lower low. It is not a close below. I am expecting a close below this candle here. I talked about that in the previous video as well. If we get a close below this candle and we validate that with another close below that, then we will get another low, and that would show us that the market will be starting to turn over and it'll be weak. Right now it does look good, but it hasn't broken down from this 154.10 level, so that's something we need to keep our eye on. Now, on the bearish side, if we do hit the 157 level and this does in fact turn out to be resistance, so we say we go up here, and then if that happens, then I think that we will break down from the 154.10 level, and then we will go right into this gap fill here. Probably get some intraday support. Actually, this might be actually pretty good support. And then we'll probably go back right into this area right here, intraday, and then start hitting lower. Next stop after that, though, would be the 149.51 level. When would I go long? When do I think the correction might potentially be over? I would say probably around the 147.05. Again, these are the mathematical calculations. This area here is an area that I like a lot. By the time price gets down there, maybe the 200 moving average might catch up, and then we start trading higher. That's my opinion. Right now the charts aren't telling me that, so it's just my guess. So don't think that that's what I'm seeing on the charts. It's just what I think could happen if this does happen and we do get a bounce on Monday. Okay, so now let's just say we continue lower on Monday. Nothing's changed. If we continue lower on Monday, we're going to get some support here at this gap fill, maybe intraday because we already bounced off of this pivot. And then we're going to have some support there, but ultimately our support level will be at the 149.51 before we get a bounce. And if we get a lower high off of this bounce, then that would have confirmed the trend has changed to the downside. Okay, so I'm neither bullish nor bearish because nothing on the charts right now are telling me either or. And so that's my analysis for the SPY. However, I am short the SPY because I am waiting for that correction to happen. I think the markets are just too overdone right now, and they need to have some sort of significant pullback in order to stay healthy. Okay. So now you can close down this video. We're into 16 minutes. If you want to stay on to see other analysis for other things, then you're more than welcome to. Alright, this is the chart of the GLD, which is the ETF that tracks gold. Let me load my drawings here just to make sure that's fresh. And then let me load a longer time frame here. Okay, so now in the previous video I said 142.88 would be the next stop. We got close to it but didn't really get there. We actually got support intraday off of this green line here. Obviously it's not perfectly drawn, but because of the weakness we actually gapped down, and I posted in Facebook that I would actually consider taking this trade at the 127 level. 127 being the low of this candle here, which was 127.80. That would have been a nice double bottom trade, and I think because it was down so much, that would have been a very good, nice support level. Not because of a mathematical calculation, but just using standard, trading technical analysis. But we didn't get to that 127 level. We actually got down to the low of this candle, which was 130.51. So that's about $2.50 off. And then now we're starting to head up. Do I think that this would actually come back up to the 142.88 level to do the gap fill kind of thing? That's a possibility. Okay. I think that we might actually get some resistance maybe around this level here. This is a potential here. Okay, so just keep that in mind. There's going to be a lot of manipulation for gold right now because gold is weak, but that is definitely a possibility. This could actually head lower, so we may go around this way. For example, if we go up into this level, or better yet, if we actually go up into the 142.88 level, I'll really consider initiating a short on gold. Okay, but again, I'd have to wait till that actually happens. So because we didn't hit the 127 level yet, I would not take it. Let's just say if it happened on Monday. If on Monday we hit the 127 level, which is around 127.80, which is around this one, if we drop right into this on Monday, I will not take that trade simply because we got close to it already. We didn't go straight into it. I would have taken the 127 trade if we went straight right into it, but because we didn't, again, you guys know how I trade. If it comes close to a level, then that level, it's to me, that level has been tagged already. This is kind of still far apart, but we're consolidating here. So if we do go into the 127 level, there's a possibility that we could actually go lower. Okay, the next stop would probably be below the 127 level. This level all the way down here, which is the about 123, around there. If we can get down there without consolidating first, we go straight down into this level here, then I would initiate a long trade for the GLD. Okay, so my short trade, if it gets to the 142.88, initiate a short. In fact, This 142.88 is probably not going to be a good level anymore. I'd have to recalculate, but it's going to be around this gap fill over here. Then I'll initiate a short, but if we can fall into this on 123, then I may actually initiate a long. Let's see. Yeah, I think that would be a good area. And then obviously your next stop would be this pivot point here, which would be around the 112, and that's a possibility, but it doesn't look promising as of now. Okay, so that's the GLD. All right, this is the daily chart of ABX. ABX is the same scenario. I had this green line drawn in over here. I said I would take the trade at 1750, right? The low of this candle was 1751. Okay, so I missed this trade obviously by 1 penny, but at the same time, it might have been a good idea, because what happened was we had an intraday bounce on this 1850 level, which is pretty interesting. Okay, and then the next day we break down from this 1850 level, and now we go back and we retest the 1850 level. Pretty interesting, isn't it? In fact, it closed on 18. It opened at 18. Open was 1851, which was 1 cent. Okay, and then intraday we started heading lower. What this looks like to me is a possibility, and I said that we would have to be, or I would have to be careful of taking this trade because earnings are so soon, which is actually on the 24th. Okay, so just keep that in mind. And I guess it's a good thing that trade didn't trigger, because earnings is now really close, and it doesn't look like we're getting a significant bounce. What's looking like is that it's looking like that we may be consolidating. And if we consolidate under the 1850 level, then I expect ABX to also fall even farther. So where would I take ABX even if it falls even farther? I mean, this is really good support right here, to be honest. I don't see another technical support level until you get to about this area right here would be a nice area. Ultimately though, we got a lot of consolidation over there. Right around here would be a lot of support. So let me just draw a straight line. See if I can get it straight, and then just go straight to the right. Okay. So we're looking at about $14. Okay. So let's just say earnings is bad. We drop into 14 bucks. I may consider going long on ABX. Okay. This is the chart of Apple. Okay. Apple, I just wanted to bring up because, again, I've been talking about Apple being weak for a very, very long time. And a lot of people, they just don't believe me because Apple is such a big company. But then, I mean, Apple went up to as high as 700, see, 705.07. I was calling a short around this area here, which was about 680. It just went a little bit higher before dropping, and Apple's been weak ever since then. Okay, now when you have the tech giant being weak and you have the markets going higher, that just doesn't make sense, right? So you can tell already that manipulation is already in play on the actual general markets. But in any case, 423, that is on Tuesday. Apple will be releasing earnings, and Apple has been weak since then. So not since then, but before then. So we may see an actual pop in Apple if they have any significant good news that traders want to hear or investors want to hear. Okay, so I don't play earnings. Okay, when stocks come close to earnings, that's not something I play. But I just wanted to show you Apple. Maybe I can get another level on Apple. In fact, I don't know how much weaker Apple is going to get, but I think around this level over here will be a nice level. I'll do another mathematical calculation on Apple during the week once I get a better pattern, and then I'll post it up on the Facebook page if it's before next weekend. Okay, so make sure you hit that Facebook like button so you get the updates. Okay, this is a chart of Shield, SHLD, Sears, and we talked about a breakdown of this bottom trend line here. We actually got that breakdown, but no volume behind that breakdown. Okay, I know fundamentally Sears is weak. The Sears over here is actually closing down. However, I read charts only. Okay, if I once I involve any type of fundamentals in my trading, I start losing money. So I know Sears is weak, so I'm biased to the downside. However, the breakdown candle here was done on below average volume, which tells me that this might turn to the upside. That's definitely a possibility. In addition to that, we didn't get another lower low. Remember, 1, 2, 3. Then I would take a short at this area over here. That didn't happen, so I may wait for it to get to the moving averages or possibly even the 200 moving average before initiating a short on Sears. And we'll take it day by day, but that's what it looks like right now. That may change later. This is a chart of F, which is Ford. I know we talked about Ford earlier. Ford looks really nice. Looks like a nice trade, and I would actually potentially take another long trade on this bottom trend line. I mean, obviously, I would follow the markets. The markets still looks bullish. Then I would probably take a trade at the 12.45 or this bottom trend line level. However, again, I don't play earnings. Ford is releasing earnings very shortly on the 24th. So that's the update on Ford. I am not even looking at Ford anymore. This is a chart of XHB. Now, this is a pretty interesting but very nice looking chart in my opinion. However, again, we didn't get the kind of pattern that I'm looking for. Again, we break down from this bottom trend line here. We didn't get that close below this candle here on the next day. Okay, it's got to be consecutive. So we broke down again, and then so the next day we didn't get a close below, and we're already retesting the bottom trend line. Even though we got the two moving averages here, it's going to put a little ceiling on the XHB. There is a possibility that the XHB would have enough power to punch through, being that it's been such a power horse this whole time already. So just keep that in mind. This does actually still look pretty good though. The last time it did that was around, I didn't see it actually break down from the two trend lines here, and I retested it. Yeah, that actually looks like almost the same, except the moving averages in this area wasn't sloping downward. We broke down over here, we broke down over here, and then we broke down over here, and it wasn't together. So there could be some resistance around this area over here and these two moving averages. So we could actually see the XHB start turning over, but again, the pattern's not there in my opinion. So this XHB is now off the table. Alright, one chart I wanted to show you guys was HPQ. This was the chart that I did not take the trade on, unfortunately, which kind of makes me sick. I missed this one also by 1 cent. The high of this candle was 22.45, and my level too short was 22.46. This is a really nice consolidation pattern over here, and I missed it. I did post this on Facebook, and again, I'm not gonna lie to you guys. I'm not gonna say, oh yeah, I took this trade, blah blah blah, I'm making a lot of money, sign up for my service. um, you know, I'll be honest with you guys, I do watch some other people's videos just to see what their interpretation of the market is. And to be honest, everybody has their good points, but the one thing that irritates me a lot is, there's a lot of times where I'll see traders post videos that actually, charge you for a service, and they'll say, I think we should short HPQ around this level. And then HPQ goes higher. Oh, I think we should short it at this level here because there's a tail and there's volume. And then HPQ goes higher. Oh, I think we should short HPQ over here, and it goes higher. And then said, I think we should short HPQ here, and then HPQ drops. And then they make it a big thing saying, I called the HPQ dropping at this level. Sign up for us, this service right now. Make the money like we're making. We are doing all this kind of stuff. If you're not following our service, and you're not gonna make money, blah blah blah. That's just, that's ridiculous. I mean, they might be good traders, don't get me wrong, but the whole fact is they're not real. You know what I'm saying? I mean, be real. At least be honest about it, okay? And there's also another good one is, oh, I think it might go down here. You just never know because the markets, are unpredictable. You know, oh, I think it'll turn over here, and then um, it drops the next day, and they're like, oh, that's what I said. It's gonna drop over there. I told you guys that it was gonna go down, and it went down, blah blah blah, and then it starts going up. Okay, and then all of a sudden it's silence. They'll never talk about that again until this drop happens, and then oh, they make it a big thing. So bottom line is, if you're gonna follow somebody and you're gonna pay for a service, just make sure that the type of trading that they do, meaning their style, their indicators, their theories, their I don't know what that word is. Just make sure it works for you because it might work for them, but it might not work for you. So you just have to be careful. And the only reason why I'm telling you guys this is because I fell into the same trap years ago when I first started trading, and a lot of times it did help me because, like I said before, for you new time watchers here, I've signed up for so many different services, but what I got out of it was I got the best of what they used that worked for me from each and every trader that I followed. And I combined it into one, which is now my own methodology. Okay. In addition to that, I discovered, you know, a mathematical calculation that has been working for me very well as of late. And again, it's more than a year old, tested time and time again. And for the old timers that have been watching these videos, know exactly how well they work. And they also know how well they don't work. So you got to just keep watching these videos and you'll get a better understanding on how these mathematical calculations work, okay? Maybe I'll make a video on how they work, but I won't get into that right now. You can rewind. There's a lot of videos out there that I tell you what to look out for when you see price hit these patterns here. Anyways, so I missed this trade here, which kind of sucked. It kind of consolidated right above the 50 moving average, and now we get a drop again. So if you're following HPQ, this is what I see. I see a reversal candle here on higher volume from the past 3 days. So I kind of like this. Unfortunately, I say unfortunate because I don't really like it now, but I kind of like this for a long trade. It is into somewhat of support from this gap area here, okay? And this gap area here has never been tagged. What I mean by that is over here we got into the gap fill, but it never dropped. It just continued higher. And do you know why it continued higher? I'm gonna just give you a guess, okay? I'm just gonna give you a guess right now why this gap fill over here did not hold up. Okay, or I'm just gonna give you some time to think about it. I mean, we did get a small little down day over there, and then technically, I could have grabbed the bottom of this body over here. But I'm just gonna give you a guess, give you a few seconds to figure out why it didn't hold. Okay. Well, obviously, nothing's 100%. That's true, but why on a technical basis did it not hold? And I've said this many times. I even said it in this video here. I'll let you look at this area right here a little bit closer. What could it be? Okay, so I'm going to tell you right now. See this little light bulb over there? That's because earnings happened the day before, which gave this so much energy to pop right through and break from the gap fill. When you see this kind of play over here, you can see that this is also going to be support. And that's exactly what we did when we came back down to retest this area over here. We got an intraday bounce. Now, I kind of like this as a long trade. We got the volume, we got the reversal. Okay. The only thing I don't like is the 50 moving average is right there. So even if we do bounce, it's not even going to go very high. Okay. But I am interested in watching this on Monday to see that I could potentially take a long trade here. Okay, just a potential. What I would have to do is look at the intraday pattern to see if it would be worth actually taking that risk and taking the trade here. Okay, because technically I would wait to either a gap window here, or better yet, this gap fill all the way down here along with the 200 moving average with a reversal candle. So if this reversal candle happened here with the volume that we got, then this is, I would be like releasing this on Facebook saying take a long trade on HP, because it'll be a counter trend trade, but that is a lot of support right here. Okay, so I just wanted to show you how these things work and how much there is to learn about charting. And this is something that I don't think I've talked about in any of my videos. Actually, this is probably the first one, because it's rare. It's not rare, but when I make these videos, it does become rare that you see patterns like this where you have good resistance, you break through it, when you come back down to the good resistance, because it was never actually used as resistance, you're gonna get support. Okay, and that's why you got at least this intraday support on this candle over here. All right. Okay, I don't know if we talked about Morgan Stanley. Looks like they released earnings, and I guess people didn't really like what they heard. What I really like for a support level on MS, the code here is MS, 1862 would be the level that I would probably initiate a long trade. Again, we go straight down there first. We consolidate right before it, then 1862 is off the table. Deal me another hand, okay? Because I'm out of this game right here. Alright, anyways, I'm into 36 minutes. I think that's long enough. If there's anything new that I find, any new stocks that are out there, I will definitely update you guys on Facebook. I haven't been as active when I first created the account, but maybe I'm a little bit, I have been a lot more active last week simply because it's been so volatile. So, you know, it really depends on how busy I am during the day, which would determine how active I could be. I do apologize that I really wish I could be more active, but I do have full-time jobs just like most of you. But you know, most of you have smartphones that you could actually trade off of and or watch Facebook. So hopefully my updates help you as much as I possibly can. In any case, thank you very much for watching these videos. God bless you all. Good luck to your trading, and I hope to see you in the next video.